Hi traders, welcome to the weekly report. Let's take a look at the markets first. S&P 500, very nice uptrend, but we have seen in the last week a pop-up of 1.7%. I just want to remind you that a week before that we've seen a drop down of more than 2%. So if we're looking at the past 1.5 months or so, we're seeing no more than just a consolidation here at the highs. Last week we had a very interesting breakdown formation, technical formation, head and shoulders, and if we're moving down again to this 1540 point on the S&P 500, then it's looking even worse. Now, I'm not saying that we're going to see a move down. I'm saying that a consolidation should move either ways, either up to new highs or lower. But when I'm looking at the economic data that we've seen last week, then I'm really seeing some very soft data. We have seen an expansion of 2.5% in the GDP, but the expectations were for 3%. We are also seeing 50% of the companies reporting where the profits has grown compared to last year's first quarter, of course, but the real important number is the income, and the income moved down in expectations compared to the expectations, of course. So most of the companies are not up to expectations, although the Fed, of course, continues to buy bonds at an enormous rate of $85 billion a month, but we need also to take a look at the wider picture. So take a look here. This is the last few years of the S&P 500. So take a look at what happens usually around this time, around April and May. This is 2010. This is 2011. Started at April, continued in August, 2012, and we're right over here. So when we're seeing a move like this, like that, or like this over here, we're usually seeing some kind of a move to the downside, or at least a retest to the 1480s right over here. This is where I'm expecting the market to move. Of course, what we had in 2009 has nothing to do with the usual market reality, because that was after the breakdown of 2008 and the beginning of 2009. So when we're looking at the wider picture, we should see some kind of a market correction to the 1480s. Now, I'm not saying it's going to happen this week or next week. I'm just saying that if you long the market for the long run, you should probably lower your sizes. If you're a trader for the short run, like I do, then you should probably look for shorts, and that may be more interesting than longing the markets. And here is, guys, my swing pick for the next week. ABBV over 46.32. That's a pharmaceutical company from Chicago, a biotech company. It's a new issue, so you can see the daily only starting at January, but a very nice uptrend. There has been a very interesting breakout here at the $44, a move to the top, a retest to the breakout point, and then we can see a move to new highs right now, right over here. So I'm looking to long it for a few days up to a few weeks. My target is going to be the same as my stop, my initial target. My stop is below 44, therefore my target should be approximately $2 to $2.50. This is where I'm going to sell 3/4. Guys, a lot of you have asked me recently about my broker. I'm trading with Colmex Pro. Colmex is a regulated EU broker, which means it cannot provide services for US customers. But if you're trading equities and Forex outside the US, then Colmex Pro is the biggest broker outside the US, and trading with Colmex has a lot of advantages, like the deposit is no more than, well, the minimum deposit is $3,000. You can get up to 1 to 20 margin, and the commission is starting as low as 1 cent per share. So if you're outside the US and you're interested in trading equities or Forex, I would be very happy to help you open an account with Colmex. Just email me, and I'll be very happy to help. That's it for today. Thank you very much, and see you next week. Guys, have a great weekend, everybody, and see you again next week.